Did Tesla's Cybertruck just lose nearly 40% of its value? And is Elon Musk really sleeping in server rooms again? Let's break down the week's biggest Tesla stories that every investor and owner needs to know. Hey everyone, welcome back to the channel. It's Ken here, bringing you the latest updates on Tesla, Elon Musk, and everything in between. If you're into EVs, investing, or just a fan of innovation, you're in the right place. Let's dive in. First up, the shocking drop in Cybertruck trade-in values. The Cybertruck only started deliveries at the end of 2023, yet already owners are reporting massive losses on resale. According to TechCrunch, one owner who bought a dual-motor AWD version for $100,000 tried to trade it back to Tesla. The offer, just $63,000, with only 19,000 miles on the odometer. That's a 37% drop in value. Even more surprising, the top-tier Cyberbeast, purchased for $127,000 in late 2024, was only valued at $78,000, nearly a 38% loss. Typically, new cars lose about 30% of their value after 2 years, but the Cybertruck is already outpacing that in under a year. For owners, this is a serious red flag. One reason may be ongoing quality issues. Some owners have reported parts like the trim falling off while driving, and yes, even accelerator pedal problems. Naturally, this damages resale confidence. Another factor, Elon Musk's political stances. Some owners say they've been targeted for vandalism just for owning a Cybertruck, especially in more liberal areas. Now, Tesla did initially enforce a 1-year resale ban on Cybertruck owners. That's now eased, but trade-ins are currently limited to swapping for another Tesla vehicle. Still, these low trade-in prices could hurt Cybertruck's long-term value and brand perception. Next story, Elon Musk is back in beast mode. On May 24th, the social media platform X, formerly Twitter, experienced a major global outage. Tens of thousands of users across the US and beyond were suddenly unable to access the platform. The cause? A fire at a key data center in Oregon. Failover systems didn't kick in properly, leading to extended downtime. In response, Elon Musk posted on X, declaring, "I'm back to working 24/7, sleeping in conference rooms, server rooms, and factories." But this wasn't just about X. Musk also pledged to increase hands-on leadership at xAI, Tesla, SpaceX, and even upcoming Starship launches. He also announced a scaled-back role in his volunteer work with the government efficiency group DOGE, now limiting participation to just a few days every 2 weeks. What's important here, this isn't just for show. When Musk gets directly involved, things move fast. This renewed focus has already sparked positive reactions from investors, with a modest bump in Tesla's stock price. Bottom line, Elon's serious, and when Elon's serious, things start happening. Let's see where this goes. Let's now talk about the major shareholder lawsuit involving Tesla's board of directors and why it just resulted in a $735 million settlement. Back in 2020, Detroit's Police and Fire Pension Fund filed a lawsuit against Tesla's board. The claim? That board members had received excessive and unfair compensation. This wasn't a personal lawsuit, it was filed on behalf of Tesla itself. So if the claim was successful, the money wouldn't go to the plaintiffs, it would go back to Tesla, benefiting all shareholders. In July 2023, Tesla's board agreed to settle without admitting fault and returned $735 million to the company. This included a mix of cash, shares, and canceled stock options. On top of that, directors also waived all compensation for the years 2021 to 2023. Total value of the settlement? roughly $919 million. Important note, Elon Musk wasn't part of this payout. He never took any board compensation, so his name isn't on this refund. The settlement was officially approved in January 2025 by a Delaware court. However, the legal fees, $176 million going to the plaintiff's attorneys, are being challenged by Tesla in the Supreme Court. Next, let's clear up some confusion about Robin Denholm, Tesla's board chair, and her recent stock sales. She sold a large number of Tesla shares, and some have questioned her motives. But here's the truth. These sales are directly tied to the board compensation lawsuit. Between 2017 and 2020, Denholm was granted stock options for around 2.05 million shares. Of those, over 1.09 million shares have already been sold. But this wasn't for personal gain. It was to fulfill the settlement obligations. Since Tesla can't legally cancel these options, the only way to return value is to sell the stock and give the money back to the company. Also, these sales were executed through a 10b5-1 plan, a legal, pre-scheduled trading program designed to avoid insider trading violations. In short, this was planned, legal, and in Tesla's interest. Today, Tesla board members no longer receive stock options. They're on fixed annual salaries. Denholm currently earns about $219,000 per year, up from just $45,000 when she first joined the board in 2014. No bonuses, no options, just salary. So, to sum up, Robin Denholm's stock sales were not for personal profit. They were part of a legally binding settlement aimed at returning value to Tesla and its shareholders. It's a story that deserves more clarity and less speculation. So what can we take away from today's updates? First, Cybertruck's resale value is dropping faster than expected, something every current or potential owner should keep in mind. Second, Elon Musk's return to 24/7 mode shows he's once again deeply involved in the day-to-day at X, Tesla, SpaceX, and XAI, which could signal faster innovation and stronger leadership. Third, Tesla's board agreed to return nearly $1 billion in compensation, a rare move that underscores a commitment to transparency and shareholder accountability. And fourth, Robin Denholm's stock sales are tied to that same lawsuit and shouldn't be mistaken for self-interest. She's fulfilling her obligation to the company. These aren't just headlines, they reflect how Tesla operates as a company: clear, bold, and at times controversial, but always worth understanding deeply if you care about its future. What do you think about these developments? Let me know in the comments. I'd love to hear your perspective. Quick Tesla stock update before we wrap up. As of today, TSLA is trading slightly down at $339. That's it for today's video. If you found this helpful, make sure to like and subscribe for daily Tesla updates. I cover everything you need to know, from tech and leadership moves to stock trends and future products. Thanks again for watching. Enjoy life with Tesla, and I'll see you in the next one.